Good afternoon, everyone. It's Andrew Comstock with Castlebar Asset Management, and it's February 9th, 2018, about 2:30 in the afternoon, and we just wanted to touch base after what's been a pretty volatile few weeks in the market and give you a quick update. So where do we stand now? It's like I say, it's Friday afternoon, and we are kind of in the middle of a market correction with stocks. And we understand that with any downward move in the market, there's always some nervousness around that. We hope to put some context around what's going on and ease any concerns and help explain what's going on. Like I say, we're in a market correction, and a market correction is defined as anytime we see stocks pull back 10% or more from a recent high. And these are pretty normal, actually, in a bull market context. And so let's talk a little bit about the history of corrections in the stock market. The last one we experienced was in the first quarter of 2016, so less than 2 years ago. Most of us have forgotten that, but we sold off almost 20% in the first quarter of that year. We expect to see this in about every year and a half. Recently, they've been happening a little less frequently, but historically speaking, we see just under one a year. And most people want to know, how long do they last? Generally speaking, between 20 and about 100 days, with the average about 70, and that's in trading days. So they don't solve themselves in a couple of days or a week or two, but they don't last for a year or two either. You're probably asking, why are we selling off this way, and why is it happening so quickly? And there's three primary catalysts for the sell-off that we can see. One is inflation, the second is interest rates, and the third is we're just flat out overdue for a correction. So on the inflation side, we've gotten data in the past week or two that show that wages are starting to pick up. And this has been a missing piece in the economic recovery. So this is actually a positive sign that the economy is doing well, and that workers across the board are starting to see an increase in wages, which is a great thing. That means they're going to go out and spend more money on cars and eating out and fixing up their houses and stuff like that. So that's a positive side. But we also realize that the Federal Reserve may have to start to increase interest rates a little quicker than expected to kind of deal with keeping things calm on the business or the economic side. So that's the interest rate side of it. Is right now we're pricing in about 3 potential rate increases this year, and we're starting to see interest rates already move higher in anticipation of that. If wage inflation continues to be more robust than we think, they may have to move a little more quickly than that, and that certainly is going to impact stock market performance, and that's what we're seeing right now. The other thing we'll say is that we're just plain overdue for a correction, and we've got a couple of charts that go into this. So you can see this is the S&P 500 year to date. We started off the year on a fantastic rally. We were up 7% before we knew it, and then we've given almost all of that back, and now you can see we're down about 3% as of the time we're recording here. But the real history thing, I think, is looking back at what we've done since the election in 2016. So I think there's 3 pretty historic milestones that we saw with the stock market. The first up is we had 12 consecutive months, or I should say every calendar month in 2017 was a positive month for stocks. That has never happened in the history of the stock market. So that's our first feat of history that we accomplished last year. The second one is on this chart. As you can see, that we did not challenge or did not sell off more than 5% from the all-time highs in the markets once since the election. That was another pretty amazing feat. We went over 400 days without seeing a 5% downward move off the all-time highs. Again, that just kind of talks about this slow grind, or this long grind higher that we had, and got us all probably a little bit complacent. The other thing we saw is in calendar year 2017, there wasn't a move of more than really 1.8 or 1.9% on any given day. And we've pretty much had a move like that every single day this week. Now, while it's not normal to have that all the time, you do expect to see that every so often. So we had a very abnormal period, of market complacency, where things just kind of slowly grinded higher without volatility to the upside or the downside, and that's really not normal. So you can see the S&P 500 performance since the election. You've still performed very, very well. You're up over 21% since that, even with the recent pullback. And you can see this is the S&P 500 over the last 10 years. You can see that there's been various corrections, but the trend has remained relatively steady the entire time. And over the last decade, investing in stocks has been worked out well. And you can see over the long term, over the last 30 years, stocks have been a fantastic investment. And we have little blips along the way that you can notice along the chart, but we've always rallied, we've always come back. And so that's just kind of something to kind of put into perspective. So a lot of people are asking, do we expect this to be the beginning of a bear market? At this time, we don't think that's the case. Generally speaking, we wouldn't see the economy performing as well as it is, and we'd see a few other factors going on right now, with a recession maybe on the immediate horizon, but we don't see that happening this year. So we feel the economy is strong. We feel like it's still important to be invested and to maintain your investment allocation. So another question we're getting is, what does this mean for my financial plan? In the long term, this doesn't impact, your financial goals. It's going to look like a blip on the radar screen in a long uptrend, what we suspect. In the short term, it doesn't make sense to take any extraordinary actions whatsoever. We've created a strategy and a plan for you, and we expect for moments like this to happen from time to time, and we account for that in plans. So we hope that we put a little context around what's going on with the markets, and wanted to keep this video short, but we hope you have a great weekend. If you have any questions, please feel free to reach out to myself or Brandy here, where we'd love to talk to you guys, and have a great weekend, and we'll talk to you soon.